Joanna, it just seems that we continue to see that divergence, whether these PMI numbers from Southeast Asia are really disappointing. Vietnam, Indonesia still in contraction territory. Indonesia really not doing great, while Northeast Asia continues to see strength. Is this what we're seeing in the broader economic recovery as well?
Look, the broader story has been we're already at we've already passed sequential peak of growth momentum. So we are already seeing a slowdown. And right now, it's still very, very uneven. Obviously, there's two major differentiating factors. The spread of the Delta variant and vaccine management has been a huge headache for South and Southeast Asia. So seeing, for example, the PMI data out of Indonesia is not a huge surprise to the extent that, we have seen, again, surging cases in Indonesia, as you know, and therefore leading to some tightening restrictions. But Indonesia by far is not the only one. In fact, cases have come down from the peak in Indonesia, but we still have very high cases in other places like Thailand, Vietnam, Malaysia, and now there's a concern about Delta variant in Philippines. So in the last, over the weekend or so, we've actually had more extension and implementation of tighter restrictions. So we've got the ECQ now in Metro Manila and Philippines being imposed for 2 weeks. We've got Thailand and Vietnam extending. So obviously that's having an impact on factory production and manufacturing activity. And the other thing that really is the differentiating factor is really to what extent the in-demand electronic components, especially chips, continue to be very strong. And that's why we're seeing this outperformance between Taiwan and Korea.
Is that what we're seeing in China as well? Because the PMI numbers eased there too. Was it a supply issue here?
No, but China is really a combination of a number of factors. We've already known that growth is already sequentially slowing. And that's part of the reason, again, exports have done relatively well. But again, even if you look at the US, as the economy reopens, there's more shift towards US consumption, towards services. But in China, we've obviously have cases where after a very strong sequential momentum, the lagged impact of the tightening, especially tightening credit, has obviously, and this sort of structural push for decarbonization, plus also some of the supply side constraints is also creating a bit of a slowdown. And I think what's interesting in the PMI data out of China is that we had new export orders actually declining for 4 months in a row. And when you factor in prices, material prices being high, that obviously is going to put some pressure on the SME sector, which is why we're going to see more targeted easing in the second half of this year.
Given that we already are seeing a slowdown in the recovery, is this the wrong time for a regulatory takedown?
Well, I think we have to differentiate some of the structural issues and cyclical issues. Yes, China is slowing down, but I guess the question is the slowdown serious enough to really deter Chinese policymakers from having to pursue some of its structural objectives and social objectives? And at this point, we don't think so yet. We think they have some policy tools they can use to mitigate the slowdown in some sectors that they want to do. So, for example, they might try to slow down, they might try to cushion SMEs, again, partly through these sort of targeted liquidity easing measures and targeted easing access to credit. But I do think that the regulatory crackdown does create uncertainty. And uncertainty risk premium is not friendly to investment. So there is certainly a risk. Certainly, if they don't try to kind of provide more regulatory clarity, this uncertainty risk premium could be a deterrence to investment growth. But again, at the moment, we're not yet thinking that Chinese policymakers is too worried, that we don't think they're going to turn around and slow down the regulatory easing dramatically. I do think we're going through, as I said, a 6-month rectification period. I do think as they they want to clarify some of the concerns, and hopefully that clarification of concerns reduces some of the uncertainties. And, I think we are seeing some positive light to the extent that CSRC is engaging with market participants. There was even news over the weekend that CSRC wants to engage with the US SEC. So obviously the hopeful that there'll be some clarification which can at least remove some of the tail risk concerns.
Yeah, that communication can only be a good thing, right? When it comes to calling for improved policy efficiency, what does the Politburo mean here?
Well, I think, when we look at the policy we've had this year, one of the interesting things that have been surprising to us is that fiscal policy, especially off-budget fiscal policy, the local government special bond issuance, has been significantly behind target. And there's been some slow implementation of that. So I think we're expecting in the second half of this year, although on-budget fiscal policy has been on track, some of the off-budget kind of local government kind of quasi-fiscal spending may have room to really step up, meaning kind of get this local bond issuance, kind of the projects going through, some of the infrastructure to kick in. And hopefully that policy efficiency will help provide a little bit more fiscal support in the second half. I think that's one way we're kind of interpreting it. And I think in terms of policy efficiency, I think China still wants to address some of the financial imbalance risk. They are still concerned about, debt and leverage in the property sector. And this is why when you talk about kind of policy easing on the monetary front in terms of liquidity easing, I think what we're going to see is a kind of a combination of maybe targeted easing for SMEs, but at the same time, I think there is still some concern about developer financing, and there's still the risk that they might tighten some of the developer financing as they try to manage the distribution of where credit is going to.
Johanna, will there be broader economic impact coming from the U.S.-China geopolitical tensions, especially when we hear about the SEC now really halting those registrations of U.S. IPOs by Chinese companies and the fact that the access to capital could be restricted?
Look, I think geopolitical tensions are always at the forefront. Now, I think at this point, we're not expecting, there's going to be this complete financial decoupling. I think given the volatility we've seen in some of the China-listed shares in the U.S., it shouldn't be a surprise that if I were the SEC and I have a responsibility to U.S. investors, I would obviously want more disclosures and clarification to protect investors. So to the extent this is not really that, it shouldn't be as a huge surprise. Hopefully what could happen if there's communication between SEC and CSRC is that, maybe China's position about scrutiny and listings will be clarified a little bit more to SEC, so there'll be a little bit more understanding. But again, I don't think these policy steps that China is doing in regulatory tightening is targeting, because they are against kind of capital market access to the U.S. I don't think that, to me, that is more the unintended consequence. I really think that China has these social structural objectives. So, for example, this three-child policy, and therefore the desire to, again, mitigate some of the costs in terms of education, in terms of health. So, real estate, for example. So I think some of these social objectives, really more domestic objective driven. But of course, a lot of these big tech companies are also listed offshore. And obviously that created a lot of ripple effects. But it kind of does show you that this China regulatory tightening means that domestic policy objectives really have kind of the primary goal. And we just hope that because China also, from its domestic policy objectives, I think accessing Chinese, foreign capital is still important for China as it wants to innovate and develop and become a more R&D intensive economy. So I don't think they're going to want to shut off capital market access in that perspective.